What he just said, did anybody else catch that? If you're panicking and freaking out about your trade, you're probably over risking. If you feel that feeling and you're in a trade, you're probably doing something that you should not be doing.
I think I mentioned this in one of the recent classes, and you've been saying this for however many years I've been here, but she said some things are cotton, some things are cotton. And when I came, I was like brand spanking new, didn't even know how to open a trade on MT4. So as I've been learning things over time, and I'm definitely a visual learner, so I make more of a connection when I can see what's happening, or if I'm, and also kinesthetic, so also by doing. And what just really clicked for me was the stop loss being at structure that finally just clicked for me. Because the thing is, like you said, Jenny, it's like when your analysis is correct, but it's like your stop loss is too tight or whatever. And even the guys at Top Step said it, they were like, avoid death by 1,000 cuts, the kind of thing. And so just recently I've been playing a little bit more with that and I'm excited about it. So thank you for sharing that.
I'll insert there. There's a lot of people, and as I'm trying to quote perfect, I mean, perfecting is not something that's possible, but as I'm looking to better my futures trading, I know there's so many methodologies that keep the stop loss really tight. And then if different people react psychologically different to different experiences, there's no way around that. We never talk about it enough, but I don't think we could talk about it enough. I really hate being right on a trade and getting nickeled and dimed to death with these tight stop losses because there's other factors. There's the fact that, hey, you were going to sell it, but you got wicked out. You're going to buy it and you got wicked out. And then right here, I'm going to the gym or I've got a coffee date today. I missed this trade and then this trade happened and I wanted to talk to my son after school. Like all these other things happen. And I just feel like the axiom of trading and indoor life is when you're getting nickel and dime like that, yes, you might be ending up with that 3 to 1, the 5 to 1, the 10 to 1, ours, which I know YouTube is famous for. Yay. I would just think you get beat up so often in that battle for those 10 to 1s. And I can't speak for everyone. If there's somebody on this call who's really good at it, please come out to one of these calls. Let's talk about it because you will help other people. I will come to the table today, and at least as of today, I am not so good at it. Okay, so what the methodology is doing, which is the stop loss is way far away, gives him peace that he's losing so rarely, even if his wins are just kind of nickeling and diming into that 4 to 5% per day. But he's losing so rarely, it's not mentally and emotionally defeating. It doesn't feel, come on, you guys have seen the chats where somebody's feeling discouraged, right? They're like, well, when I do this, if this happens, if I do this, this happens. And that's just, it beats you emotionally. And I just think this method, the further stop loss, which you guys know I'm a huge fan of, it changes the way you trade dynamically. And there's nothing that replaces that, at least not that I found. And I am looking currently, again, reluctantly, but currently again. So,
And honestly speaking, your emotional capital is more important in this business than your financial capital.
yes. Can we bookmark that? Can we make like a short with that? Because what he just said, you guys.
You can have millions of dollars, you lose them all. But somebody who is invested in their emotions and has $1,000 will make it long run more than you with $1,000,000. I'm speaking from experience. It's what I've burned hundreds of thousands of dollars. I said hundreds in the market, hundreds of thousands of dollars, and I could not make it work. Kept trying to learn the market. I needed to learn. Once trading in the zone, flipped that switch, and then Jenny, you hammered everything in. I mean, it's just, I go to bed, I'm sure tomorrow I make $1,000. Do you know how the feeling that is? Like my wife says, my birthday is next month. I said, okay, wait for New York Open. I just made money for a handbag. Man.
That's so awesome. You
People
guys,
speak of you guys as a cheat code, really the all of it. It's funny because we always come back to trading the zone. Like I've read, so many different books regarding trading, but trading in the zone, like it's just so straight to the point and it goes to all the psychology, regardless of whatever style that you know or that you use it when you come into the markets as far as for trading and execution. If you actually get like all the tidbits that are from trading in the zone, like one of the things with taking those trades and taking them with confidence because he's using the equity that he's comfortable with, so he's not emotionally tied to it. But one of the other things that Mark Douglas said in there is he says that when you get your signal, when you get your trade that matches your trading plan, you take the trade because you have no idea what the market is going to do. Now I know ICT will disagree with that, and he's obviously a surgeon who knows exactly where the market's going to go. I'm not clowning ICT, I like ICT, but The truth of the matter is, for the majority of us, and when we're in the trade and when emotions get stuck, and sometimes even if your analysis is right, there's always a potential that you're going to be wrong on it. The only way that you can maximize on it is that, one, your capital is, you're putting the capital at risk that won't blow your account in 1, 2, 3, 4, 5, 6, 7, 10 trades, right? And then you just keep taking it, and then you just let the process work itself out, and then the numbers work itself out. Another thing that's really interesting that I know anybody who's seen this, if you use let's just use the golden strategy because that's what we're most familiar with, right? If you go back, regardless whatever time frame that you're looking at, and you're just doing the back testing on it, you do the back test, you say, man, if I took it at this particular time where my session is, and I just did this repeatedly on a regular basis, I'm at least going to be 70, 80, 90% on there based off of the time frame and when you're executing. But when the live markets is on, and the markets start moving, or sometimes it's moving fast, slow, and you get the small drawdown before the full move plays out, you back out of the trade, and that may be because you were oversized or something else is particularly going on. So once you master that and you take all the emotions out, I'll pull one thing that ICT said. ICT had mentioned on, I think, one of his casts, that if you feel uncomfortable in the trade, that means that you're risking too much. As soon as you feel uncomfortable, you take half off. And if you still feel uncomfortable, you take more off until you're to a point where the trade doesn't mean anything to you. And that's sort of the way that you have to be in there so you can execute and do what your job is, to just take the trades when that setup shows and let the cards fold where they may.
That
Thank you so much for that statement. And you see, the ATM makes me know what I'm losing by pushing the button. Before, when I used to trade without an ATM, I'll use a 0.01 lot size, then pull my stop loss where I want it to be. That's when I realized I'll be losing 50, 20, 75% of my account. Then becoming comfortable. Then start making dumb decisions. But when I push the buy or the sell button on the ATM, I know exactly how much it's at risk when I push that button. That's why I cannot trade without it. If it doesn't work, I'm not doing anything. Because I cannot quantify my risk. I have to be sure. Remember, Matt Douglas said that in Trading in the Zone. He says, you have to reduce your risk until such one way you are comfortable at losing it. If you take a trade and you close the computer and don't have to look at it, that's the lot size that you want to use. If you keep staring at it, you are over risking. But the ATM takes all that away. It takes all that guesswork away. I know where the stop loss is going to be. I know how much I'm going to lose.
And the way they're doing it, when he wants to stop trading for the day, he can just walk away and let the open trades finish.
Right.
what he just said, did anybody else catch that? If you're panicking and freaking out about your trade, you're probably over risking. If you're feeling, come on, somebody's going to have to own their own spirit up in here. Okay. We pray at the beginning of this for a reason. So check your spirit. But if you feel your heart palpitations, if you feel your breath, okay, you know you. Okay, what's the Latin proverb, right? Know thyself. If you feel that feeling and you're in a trade, you're probably doing something that you should not be doing. You're over risking, you're over mismanaging, and you know it beforehand. So stop that. That one's huge. So many huge nuggets. Huge.
Just adding to what you just said, Jenny, and knowing that you're over risking. Another thing too that can sort of change that is that, like, if you've taken a few losses, so maybe you were comfortable with the initial amount, and then let's say if you're in a drawdown and you've had like 3 consecutive losses, especially like if you're going for funding, because with funding now you're closer to blowing your account or meeting your daily drawdown or your overall drawdown to lose an account, and then sometimes we get in the mode that when you do take a loss, like that's one thing that I've always struggled with and continue to struggle with and fine tune and learn myself with, is that when you take those losses, hey, I don't have to make it all back today. I don't have to make it back in this one session. Maybe I need to just come back tomorrow, or maybe I need to take a few days off. Maybe I need to take a week off. What if I decide that I have to be in the trade, then maybe I need to downsize smaller than my normal trade that I'm normally comfortable with, until I get that confidence, so that muscle memory comes back and I gained a little bit more equity on the account. Because if you lost 1,000 for the day, and let's say that was more than what you're supposed to, maybe you're only supposed to risk 250,000. Okay, you made that mistake as a trader. So now what do you got to do to get out of it? okay, maybe it's going to take me a couple weeks to get out of it instead of trying to get it all back in one day. Or, and I'll raise my hand. I've done this before, maybe trying to get it all back by over leveraging at the end of the session, power hour. Just take a step back and say, hey, all right, let's just do this little by little. Go stick to the plan, bring the size down a little bit because the capital is a little bit depleted on the account, and we'll eventually get back to where we got. And then once you do that, that builds so much muscle memory as a trader, and it gives you so much confidence when you get out of drawdown. I mean, getting big gains is beautiful, but nothing is better than actually coming out of drawdown and building yourself back out on the account.
Uh, you guys, everything you said, it really reverts me back to what I mentioned. I know that 90% of you guys are probably not going to agree. And if so, put it in the chat. Come on, let's talk about it. I'm dead serious. I really feel like most people come to this market thinking that their financial capital is more replaceable than their emotional capital. And I back against the wall. No way in heck I agree with that. No way. I believe your emotional capital is what runs out first and is what is most wounding, most limiting, most handicapping in all regards. Money, worst case scenario, y'all got DoorDash. Y'all got, what is it? Gosh, Helping Hands or Wagyu or something. What is the dog walking app? You guys have so many methodologies to go out and make some bucks, okay? Money is replaceable and it is abundant. One way or another, you can get a degree, okay? You can get a loan. You've got a parent. You've got to sell stuff on Poshmark. There's the amounts of ways to make capital are endless. The amounts to fix your energy and your emotional capital are limited. It reverts back to your own DNA, your own mindset, your upbringing, your level of personal growth, your level of personal belief, and so many things. And it's very, very hard to replace once you get knocked down that many times. Once you feel like a quote loser, once you feel like quote, you'll never get it, once you feel like things are just not working out for you, once you feel like, oh, you just can't see it. That capital is not easily replaced. So whatever it takes to protect your emotional and mental space in trading, the capital will come. Obviously, you can do demo accounts. You can trade with smaller amounts. The capital you can replace, even a bigger account, a $5,000, a $50,000 account. You just heard himself say he's spent hundreds of thousands of dollars in losing. I can also attest to the fact that I have spent hundreds of thousands of dollars that I was, got taken by the market. I did not take out, right? In all these years, that's part of it. But money you can replace. That mindset that says, hey, I can and will, and this is going to work out for me next week is not easily replaced. It's a lot longer. That healing process isn't always as instant, especially for some people. It just takes longer. It's very wounding. So I revert back to that one, the whole emotional capital. And the story really reiterates that because the decisions you start to make change. How you trade changes. And now you're X weeks behind, and now you're X dollars behind, and now you're more and more upset with yourself. You're self-punishing, you're self-loathing, you're self-sabotaging. It's insanity. So that emotional capital is what we're protecting, okay? 100%.